Hello, everyone. Welcome to the market update for Monday, August the 29th. A little bit of an odd day to do it. We're used to the regular schedule, but I appreciate you accommodating me. I'm a little disappointed this morning. It may show up in my voice a little bit, but I'm out. I actually wasn't planning on it. I was out here on vacation. It's a working vacation, but I'm out here in Orlando, and but when I was flying in, I heard a lady behind me in the seat say, "Oh, you'll be here for the launch on Monday," and it dawned on me that they were going to have the rocket launch. So I thought, man, I wasn't had anything planned today except for the class, and so I thought, yeah, let's go for it. Got up at 4 in the morning to make sure we didn't hit any traffic, and anyway, long story short, they ended up scrapping the launch. So the bad news is they scrapped the launch. I didn't get to, it's kind of a my once in a lifetime be able to watch a rocket launch. So that was a little disappointing for me. The good news is we get to do class because it was going to be, if they didn't launch right at the beginning of that window, I didn't know if I was going to be able to get set up to do the class. And I hate to say it, but if it would have been at the later part of that window, you guys are going to get bumped. I was gonna watch that damn launch. So anyway, it worked out. Let's get started though with the market update. It's the only class we're going to do this week. I'll try to make it as complete as I can, and there's not a whole lot to add to what I've already been talking about, but there are some key things that happened Friday that we need to mention. And before I get into that, again, if there's any questions you have during the week or any questions you have that I don't get to in the live update, make sure you send those to jerry@traderspro.com. And then for next week, we're gonna have the market update class at the same day and the same time as normal. But it'll be the only class we do for the week. I'm going to be out of town again next week as well. But that will be at the normal Tuesday, 12 p.m. It's 12 p.m. my time. That's 2 p.m. Eastern time, and then whatever the other time zones are. All right, let's go ahead and get started. I'm going to start with the S&P 500 chart. My Wi-Fi has been a little sketchy here and been a little slow, and I want to make sure that if something happens, I can at least talk about the market and make sure we understand kind of what was going on. On Thursday, or last Thursday when I was talking, we were talking about the big Fed speech on Friday. I was mentioning that I just didn't see anything that was going to be bullish in the comments, and I didn't. He wasn't going to say anything that we didn't already know. And sure enough, that's what happened. The market sold off. But as far as where do we go from here? Well, first of all, I knew that we were likely to open up lower today. It's something I tell you all the time. If you don't know it, learn it. Markets don't typically bottom on a Friday. So if you get a big down day on a Friday, you're very likely to at least open lower on Monday. It doesn't mean it has to keep going lower or to keep declining, but you almost always get at least that gap down. Now, what we're trying to determine today, and it's just a half hour into the trading day, so we don't have the benefit of being towards the end of the day, like in the normal classes, but is we don't know, is this going to end up being a bullish reversal candle? Do we gap down, and that's kind of a bottom right there? We're going to start rallying back up. We just don't know that yet, but this is something you're going to want to watch going into the close. If we end up closing lower after trying to attempt to rally, that's going to be very bearish. Right now, we're trying to rally off that gap down. If we can hold that, that's a bullish reversal candle, so make note of that. But if it can't and it keeps going lower, there could be more downside. Now, as you can probably see right here, and this is something I pointed out in previous updates, that I was expecting another move down. Could it be that this is wave A, wave B, wave C of a bullish ABC pattern? Maybe today is a bullish reversal candle, and maybe the market starts to rally back up off of that. That's definitely possible. That's something I'm looking at, especially with the price action today, trying to rally off that. That's something I'm trying to see as a definite possibility. If that happens, then you could jump into so at least a few bullish trades. The key is going to be if we can get back above that August high right there. That would be very bullish if we can get back above there, because that would probably mean you're back above that 200-day moving average as well, and and at that point that would confirm that that's a bullish ABC pattern. We won't have confirmation of that until you break out and move higher. But so in the meantime, if we rally off of this, if we rally off of today, you could look to enter a couple of bullish trades. I definitely would be getting out of the inverse ETFs. So I'm going to kind of watch those today. But if we finish like this, if we finish higher than where we open, I'll probably exit all those, because that I don't need them. And if we rally, they're just going to lose money. But I don't know if I'm going to add anything. If it does finish bullish, I already have a couple patterns already in there, or bullish long positions already in there, and I need to see a little bit more than just a one-day move to get more aggressive with that. But I'll be filling up the portfolio if we break out above, or at least looking to, if we break out above that August high. So that's going to be a key level there to watch. All right, now I'm going to jump back to the direction alerts. I just want to make sure, because the other indexes are going to look very similar to this, and then we'll go through the other charts as well. But I wanted to just start with that in case my internet slowed down, in case it was hard to see. But let's go back to the direction alerts. Not much to bring up with the sell-off on Friday. It pushed the momentum indicator back into the hold range. Really the main thing this is showing us is that we're not in an extreme yet, meaning that we could sell off and go down further and become oversold, or we could rally from here and we're far away from being overbought. So this isn't necessarily telling us direction right here, but it is saying that because we're not in an extreme either way, we could go either way for a while, depending on where the market wants to go. And, again, that's just worth noting. Breadth is back into that trending range right in the middle there. Same thing. Sentiment has come off the far right side of that, but it's still very high. We haven't, although the VIX has spiked up a little bit on Friday, we still aren't seeing fear or really any major concern, and that's kind of playing out today. The VIX opened higher today and immediately came down as the market gapped down and started to try to rally. Now, obviously, this could all change by the end of the day, and if it shows some weakness going into the close and closes weak, that probably means we're still dropping, and I wouldn't be jumping into too many positions if it were to do that. Buy sell ratios, again, they're not really showing us anything. They're just kind of close together right there. The sentiment indicators backed off into the middle. Again, it could go either way to become extremely oversold or extremely overbought. I do want to point out, though, here on the index tab, that now we have moved to a little bit of an oversold condition in these ratios right here. You're getting a lot of here's the Russell 2000. A lot of stocks have moved into sells from the hold range. A lot of stocks have gone from buy to hold. A lot of stocks have gone from hold to sell. And remember, overbought is when you have double digits, like 10 to 1 or 12 to 1. We're under 1 on here, which means we're kind of in that little bit of that oversold area. And again, that's worth noting with that, the market possibly forming that bullish ABC pattern. If it is a bullish ABC pattern, it's going to rally from here. There's some room to rally. It's pulled back enough to get a decent rally out of it. But anyway, that's something just to kind of be aware of and pay attention to. Go back into our watch list here. We looked at the S&P chart. Let's look at the other indexes, like I said, are going to be pretty similar. Dow, want to get to the Qs, and I want to get to the Russell here. They're all showing the same. Now, again, this is where it's misleading. If you don't know what you're looking for, you're saying, well, Jerry, why are you talking that this could be bullish? We're down 0.5%. Again, if you're new to this, it's learning how to read the price action. Here's where we opened today, and we're right now trading higher than where we opened, but still lower than where we closed on Friday. So it's going to show that it's down, but it's not showing the whole story. We've rallied off of the gap down at the open. Now, we're not at the end of the day here. We're at the beginning of the day, which is usually kind of weird for the updates, usually at the end of the day or near the end of the day. If it were to close like this, even though it's down 0.5%, it would be very bullish because it managed to close higher than where it opened. It's one of these early signals that you've kind of bottomed out and you could start to rally off of that. And you combine that with the potential of a bullish ABC pattern right here, and that's would be a very bullish signal near term if it were to close that way. And you'd like to see some volume, although we're in August, you're not going to see heavy volume, but you'd like to see decent volume on a reversal day like that. It's just hard in August, this time in August as well, that you get strong or high volume numbers. Usually the volume is pretty light this time of year. Let's take a look at bonds. The bonds have been moving up the last couple of days, and we were looking at this as a possible inverse head and shoulders pattern when we were riding through here, and then we kind of broke below that, and then Thursday and Friday we came right back up again. Now we're kind of coming back down. We're trying to see, is this starting to make a move higher, or is this just a little bit of a rally for another move down? We don't know yet. The key is going to be this right here. If we can get above this resistance area right here, that'd be bullish for bonds. If we drop back below this low, we're very likely to come back and test this low. Now, maybe it holds, but that would be very bearish if it moved back below that low after trying to rally right here the last couple of days. So that's what I'd be looking for with bonds. Gold looked like it could start to rally, and then came right back down on Friday. And today it has maybe a little bit of a bullish inside day. That's not a strong inside day because you've only had one down day. It's not like you've been dropping for a little while. You can see why I've stayed away from trading gold. It's very erratic right now, and isn't really behaving in a very predictable fashion. So, now at some point in time it will, and we'll pay attention to it and we'll talk about it. But I've been trying to stay away from it for the last several months because it's been so erratic. Oil's back to moving up today after pulling back on Friday. Now we thought that could happen. I pointed out this bearish engulfing pattern. In fact, didn't we get out of one of our oil trades? I think we did in the portfolio because it had a bearish candle, and we were seeing kind of a bearish reversal in oil. It's rebounded here, and we're just kind of been chopping back and forth, but you can kind of see possibly a higher high, higher low pattern right here just in the last couple weeks. We'll see if it breaks to a higher high. Right now it's basically sideways. Oil's been acting more sideways, but there are a lot of oil charts that have kind of taken off. Some of the stronger oil stocks have taken off and have looked pretty bullish. So I'm not ready to say right now I would call it just a sideways trend. Maybe leaning a little bit more to the bullish side just because of some of those individual stocks that have kind of taken off a little bit. But looking at just the USO, it looks a little bit more sideways. The dollar had a nice bullish reversal candle right here where it gapped down on Friday, closed up here. This looks like just a correction of this move up. Impulsive. This looks corrective. You're right at a breakout area right here. I think it's going to end up breaking out and going higher. Kind of pausing today, a little bit flat today, but I would expect that it's going to end up breaking out and going higher, at least based on what that pattern looks like right there. You also can call this maybe a little bit of a cup with handle type formation. And maybe it stays in this handle for a little while before breaking out. Now, if it does break out, you can take the base or top of the cup to the bottom of the cup. We'll just say the bottom's right in here, and project that distance upwards. So you can see a really strong dollar rally if it breaks out right here, breaks above this range. So definitely a little bit more bullish on the dollar right now based on that pattern. The VIX, you see the big spike up on Friday. Well, we've seen it spike up before that right here. Then it came back down during the middle part of the week last week. Strong move, closing the highs of the day on Friday. Kind of basically a little bit flat today. It opened up a little bit. It come down a little bit before I started the update. It's kind of come off the lows a little bit there. We'll see. We'll see how that closes. If it closes higher and up and the market's down, or closes lower than where it opened, that means maybe there could be more selling. So just make note of that. It might not be done yet if it were to do that. Chip stocks, the SMH, it looked like, I was talking on Thursday that, it's possible maybe this is a bullish ABC pattern. But I was also quick to note that we didn't have leadership confirmation from the SMH. It failed to get above the June high. It failed to, and then it went to a lower low right here, even though the market didn't go below that previous low. And then the Friday move, it went to another lower low right there. Now you've got lower high, lower low. It's pausing a bit right here, but again, it's not leading. It's not confirming the market breakout. So it really makes me wonder if maybe there's more selling. But I would really keep an eye on the chip sector. They are a leadership group, and more times than not, they are leading the rally. And if they're declining, they're leading the decline. So, and when they diverge, you want to see how they're diverging. Meaning if they're going up and the market's flat or down, that would be a pretty bullish sign that the market should probably follow that. Here we're getting bearish divergence and bearish leadership. It's not confirming the rallies, and that could mean that there's further downside. Now, again, this is something we're not going to base our entire trade on. The chip stock is a chip stock. Are the chip stocks leading or not leading, or confirming a move or not confirming a move? But if you add that into everything else you're analyzing, it can be very helpful, and that's why I teach it and use it all the time to see if there's any subtle clues there. And it's worked pretty much in the last few weeks. It warned us not to get too bullish with that rally and really jump into that rally aggressively, and saved us some money by not just jumping in. It wasn't confirming it. It wasn't telling us that it was telling us it was a little bit risky to get too bullish at that point. The transports, big down day again. Could this be just a bullish ABC pattern? And again, that's what we're watching as well. Is that a bullish reversal candle right there? We'll keep an eye on that. Bitcoin had a big move down. I talked about how bearish it was for Bitcoin to make this move down right here. Kind of broke that trend. Then it had another big down day on Friday or over the weekend. That might be over the weekend. Let's see, what day is that? Because Bitcoin's trading all the time, and so sometimes I don't know if this would. I think this one just trades during market hours, though. So that would be Friday's move, right? Yep, that was Friday's move. But it's been again looking like it still wants to go down. And now possibly could it be putting in maybe a double bottom right here, or it'd be like kind of like a quadruple bottom. Maybe it holds right in here. That's possible. But it's definitely not looking real strong right now. And you'd want a lot of confirmation before you'd be looking to buy into Bitcoin. I'd probably want it to break out of this resistance, hold this support, and then break out of that resistance area before I'd be a buyer of Bitcoin. You'd want a lot of confirmation there before you'd be jumping in. The HYG, again, big move down. This is the high yield corporate bonds, big move down on Friday. Again, possible bullish reversal candle right here. But this has been something that the market's been kind of watching and looking at. It's not something we're going to be looking at all the time, but as I mentioned many times, it's as long as the market's kind of focused in on it, we'll keep watching it and talking about it. But not showing us anything significant right now, although that move down on Friday was pretty big move down. We'll keep an eye on that, see if that signals further weakness. That's it. As far as the portfolio is concerned, we made a little bit. Actually, we backed down a little bit here. We were up over 127,000, but I think with the little bit of the rallies off the lows here today, we've got 3 inverse ETFs. I might just close out one of them, just so we're not holding on to all of them here with this possible reversal. CNQ, I held this one. This is an oil stock. I held this one. I didn't get out of this one when oil was a little bit weak on the last class. We had a little bit of a bearish candle on Friday. It opened lower, but it still is holding up. It's trading pretty strong right here, so I'm continuing to hold this one. No reason to get out. Let me go to my portfolio here. SARK, you can see kind of the bearish reversal candle opened up here. Again, we're still early in the trading day. I'm going to probably watch this one. I'm going to hold on to this one, though, just to see how it looks at the end of the day. Now, if all these have bearish reversal candles, all the inverse ETFs, and the market has a bullish reversal candle, I'll probably exit all the inverse ETFs. You almost always would get a rally in the market over the next day, which means a drop in all these the next day. It could be short-lived, but I don't see a reason to take a loss on these, especially since all I'm using these for is a hedge. I'd probably just be looking to get out of these. So if you're looking to make the same decision, you'll have to make that judgment at the end of the day. But again, that's what I'll be looking for: is does it look like it has the same bearish reversal candle at the end of the day? Now, if the market drops and this rallies and ends up moving above today's open, here's the open right here, I'm hanging on to it, because that would mean it failed to reverse, didn't have the bullish reversal, and that would be more bearish at that point, meaning that we could continue to drop in the other indexes. This means that these could continue to rally. I also have the SQQQ. Again, this is kind of an indecision candle, like what we call a spinning top formation. But again, it's the same thing I've been talking about. In this case, this could be a bearish ABC pattern with a possible bearish reversal candle. Obviously, I'd want to be out of that if we're to close that way. And I may close this one out just in class, just to reduce risk exposure just a little bit. NOC dropped the last couple of days. This is our defense play, but this could still be wave A, wave B, wave C of a bullish ABC pattern. So here's the breakout right here. This could be the correction ABC. I think I have my stop down below here, so it still looks like it could be okay. And if the market continues to look like it could rally, I'm going to continue to hold this. No reason to get out of this. So that's an easy one right now. Although we're down a little bit today. Actually, the last couple of days we got a little bit on this, but not stopped out yet. And another hedge trade, SOXF, same thing. If this remains a bearish reversal candle at the end of the day, I'll go ahead and exit all these. Now, as far as individual stocks, I went through a few on, quite a few on Thursday that probably are still relevant. So, and if you didn't get those, again, as always, you can get the recordings of these classes if you go to the YouTube channel, go to youtube.com, go to the Traders Pro channel, subscribe. And not only do you have access to the recordings of these updates, both the market update, the stock specific class on Thursdays, but you also have trainings on all kinds of other things. Just about anything I could think of, I did a training on. Now, keep in mind that a lot of those trainings, and again, this is for those that are new, they're done after the time I did them. They're done after the market update or after the stock specific class. Usually the first hour was the market update or the stock specific class, and then the second half hour was the training. So you might have to fast forward those videos to about the half hour point, and you'll probably be able to line it up with most of the start times for the trainings. But just be aware of that, because going through the update would be, that was, some of those are like almost 2 years ago, so it would be, the update would be irrelevant. It's not going to be any good to review that. So I would fast forward it to get to the training. But if you're playing it wondering, hey, this is not training, this is an update, that's what it is. You have to fast forward it. Usually about a half hour into it, you'll see where I start going into the training part. But I'm going to just quickly, for at least a couple picks here, look under the muscle stock tab. We'll look at the new buys. And really just right at the top of the list, we're going to stick to the top list here. There's BPT 100 strength rank. I can switch this over to signals here. Now, really what I like here is you got this big pullback, and now it's starting to move up. You've broken that lower high, lower low. There was your kind of your downtrend right there, and you've broken now to a higher high and gone to a buy signal. I was going to check what I like too is you can manage this from reward to risk, where you get a stop down below here. It shouldn't go below this low now that you've broken to a higher high. It did that today. And if it is moving all the way back up, it should get back, at least back up to this previous high. So you don't lose very much if you get stopped out. You have a lot of potential to make. You have potential to make twice as much, at least. If you're right, then you would lose if you're wrong. It'd be better if it was 3-to-1 or 4-to-1 or something like that. But a 2-to-1 would be kind of a minimum. You at least want to be able to make, at least have the opportunity to be able to make twice as much if you're right than you would lose if you're wrong. I was going to check a longer term chart on this, so real quick. Yeah. So you have a nice upward move here. This looks like the correction of that move. It didn't go to a lower low, right, of that, within that correction of that uptrend. That was good. Now it looks like it could be done with that correction, starting another move up, on to a higher high. Pretty decent chart there. I also liked CALM 94 strength rank. And you've got, obviously you had this big decline here, this rally up to here, and then you had kind of like a little bit of a bowl-shaped move right here. It dipped down, not necessarily a cup with handle. You'd like to see the handle be a little bit more sideways, but you've got a higher low right here. You're hoping that holds. If it breaks, you're hoping this breaks out to a higher high. Obviously, you've got some different resistance spots in here, but again, you could get in right here or wait till it goes back to a buy signal. Actually, today it went back to a hold signal, or it looks like it will. Wait for it to go back to a buy signal as confirmation. You could put a tight stop right here, or you could put a stop down below here. That pattern's not too bad. And then lastly, the DQ 94 strength rank. and just basically big upward move right here. This is more corrective, more sideways. Kind of held a double bottom right here. Actually, a slightly higher low right here. And then what you're looking for is to see. Now you could wait for it to break out, see if it can break out. That way, if it decides to stay sideways for a few more weeks, you're not caught in chart purgatory, so to speak. But not to mention, if you wait for it to break out, you might have the market moving above its June highs and looking a lot more bullish if it does decide to do that. All right. Well, that's all I have for you. A little bit of a quicker update today, but not much to add. And if you want to hear more commentary, you probably, like I said, go back and review last Thursday's update. But you'll probably hear a lot of the same things. But there are some, I went over a lot more trades or potential trades in that update. Looks like we're still holding higher than where we opened. Like I said, it's early in the trading day. We're about an hour in. But usually about this time, about an hour in, it's a pretty valid reversal. And then now you just see if it builds on it or if it just holds it into the close. But it's a pretty legitimate reversal if it's held it this long into the during that first hour of the market day. So we'll see if it holds, and that's going to be the key: is can it hold to the end of the day? All right, thanks everyone. Have a good rest of your week, and we'll see you back next Tuesday at the regular start time. And no stock specific class this week, and no stock specific class next week. But we'll have an update next Tuesday and make it a nice full update for you. All right, thanks everyone. Have a great week. Bye now.